We're going to start with Sysco, which is the largest of the US food services companies. It's a specific operator logistics companies with about 425,000 different points of presence. That means restaurants, hospitals, schools, hotels, and other customers. Prisons, I don't know, maybe.
Yeah, possibly.
Market capitalization, $28.1 billion. So not super enormous. I mean, we talk about companies sometimes with market caps from $300 to $700 billion, but 28 is not a small company by local standards. Price to earnings ratio quite high, 27.49. Dividend yield solid, 2.53%. It's a Texas-based company, Houston headquartered.
Yeah.
But it's a national presence. They are the largest. US Foods is their competitor, so on and so forth. What can we say?
Definitely. Well, it's quite favored by investors, particularly in the US, for that yield. You saw about 2.5% there. For a very stable earnings generator, as you mentioned, it's the largest food producer there. Huge reach. I don't think it's had the success outside of the US borders that it maybe would have liked. And I think you could view that as a positive in that it's a potential growth opportunity, but you know, will the implementation be as expected? We don't know. They did a recent acquisition into Europe, Brakes, I believe it was called.
Yes,
Braces.
that's correct.
Yeah,
Brakes,
European
I think so.
Brakes, food distributor. That looks to have been bedded down quite nicely and adding to the earnings in that regard. So yeah, I mean, it's, you know, these businesses at the heart are quite simple, quite easy to value, and you know, the Sysco stuck to their knitting.
Let's go to the chart because that will reveal all. Bit of a wobble at the end there. So a good 5-year chart. We always put up 5 years because that gives you enough time to see what's going on. I mean, if we only showed you the last year, you might think this was a company that wasn't doing well. So it's gone up probably because the US economy's been booming. And there's another factor that I want to draw people's attention to here with this company is that because of the nature of their business, which involves a lot of trucking and refrigeration, the key input cost, apart from humans, is in fact petrol or diesel, gasoline on the trucks, and then of course also energy in the form of whatever it is that they're refrigerating with. So the fact that oil prices came down and that gasoline prices came down fattened up margins in a difficult and competitive sector.
It's a great point. You know, they touted the fact that they've been able to boost profitability through cost containment, but a large proportion of that was outside of their control. It was simply the input cost of fuel. But it helps.
It does look as though fuel prices should remain fairly stable.
I think so. I mean, I think there's a cap on with the, you know, the natural gas fracking that comes on if oil moves above a certain level. So yeah, I think that is contained.
Because, I mean, we were showing charts of this. If you look at, you know, food consumed at home or groceries consumed in America and restaurants eating out, the chart, let me do it backwards. People see it looks like this. So the restaurant eating is rising and the amount of food grocery buying is declining. It's kind of crossed. People spend more money now out eating. If you think that you as a parent at home are reluctant to get involved with your food procurement, imagine how much more true that is of a restaurateur who's trying to run a business, keep the menus right, keep the front office happening, make sure the cleaning staff don't run off with the high value ingredients. They desperately need people at the back to make sure that everything just keeps coming at the right frequency and that it's fresh and it's of the right standard and pricing and so on and so forth.
Absolutely.
So those restaurants are going to be certainly using the likes of Sysco. I've walked around in the US and seen their trucks all over the show. Okay, so hot or not, I guess, is the standard question at the end of these conversations.
Look, couple points that concern me. It is expensive on a 27 times multiple. The other thing that we've got to speak about, because this is in the US space, is the potential for Amazon to come in and disrupt the space. I don't think the threat is quite here yet.
Well, talk to us about that. We can give it a little time because Amazon bought Whole Foods, which is a high-end organic retailer, but you can buy semi-prepared meals there too.
Absolutely.
And there's talk that Amazon wants to expand into the real meal delivery system like you were taking.
That's exactly it. And I mean, you know, I think we're both fans of Amazon, and to go against them, there could be some market share loss to them. So that is a concern for me. Coupled with the valuation.
Yeah, so you're going to go not hot?
Not hot for me,
Not hot. Okay, well, I'm going to stick with this one. I like it. I've never bought it yet, but I think it's a great looking company.